Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, to no surprise, the market went for the top side yesterday and posted a fresh high of 71.41 before the bulls threw in the towel and got into all sorts of trouble and the market plummeted. It is possibly noted that the profits of China industry companies recorded their worst contraction in more than 7 years on weaker factory inflations, slowing production and seasonal factors. Manufacturing companies' profits in January and February declined by a whopping 14% from the same 2 months a year earlier, the National Bureau of Statistics said in a statement. This by far is a sharp decline and suggests further troubles for the world's second largest economy, which expanded at its slowest pace in almost 3 decades last year. The government has already lowered the economic growth targets this year to 6.0 to 6.5% from an actual rate of 6.6 back in 2018. So from the tumble, taking out the support at 1790 now exposes again the region of 70.40.45. From a technical perspective, we are once again married up. Also note we did get a rejection again from the 60-day moving average, also with the supply zone above at 71.50.65. Now, a break beneath 70.40.45 would give further exposure to the downside. And look for my target for this year of 69.40.60. The euro also suffered further weakness and crushes the support at 112.60.65 overnight. This has now exposed the region of 111.60, which I do believe, from a technical point, as it's married up, could reach. So let's see how the market goes in the short term, with the resistance now seen at 112.95 to 113.10. Dollar yen not overly supportive to the current rise and still likely to be capped around 110.95.05. It is assessed that we could see a bit of weakness into today, but unlikely to give any real direction due to the lack of the technicals being a little bit muted. But we could still see a slip towards 109.95 to 109.55 and reassess from there. The pound isn't going anywhere and remains for the fourth day in a consolidation mode. The market is now waiting for further updates on the Brexit, since earlier this week the UK Parliament seized control of the Brexit process from the government in an unprecedented move aimed at ending the deadlock. MPs voted by takeover of 329 to 302 votes, and now will try to come up with a plan that has majority support after the Prime Minister failed to push through her deal. The gold slipped heavily overnight, backing away for the second time from the level of 1,324, taking out this time the support at 1,312. From that, it's now exposed the downside further and could see a move towards 07, but towards 03, towards 1,300. Figure 4 is and should supply demand. With all the risks that are out there at the moment, that includes Brexit uncertainties, along with the concerns over lower U.S. growth in the economic growth, that is, a dovish, cautious Fed, and also uncertainty to the Chinese negotiations with the U.S. should bring safe haven demand back into play, and I do expect to see, once again, a rise. I'm not going to get too negative at the lower side of the range, so I do expect to see some support to come back into the gold. Wrapping up with oil, market isn't really going too well as it coasts sideways, with the support seen at 58.5, but the resistance still locked at $61 a barrel. I do expect to see this level break and eventually move up towards 64. Any pullback should find firm base either at 58.5 or from $57 a barrel. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report and I hope you enjoy the rest of the day that's ahead.